Ever feel like, the stock market's just a runaway train?
Oh, yeah.
Prices going up, and it's like, wait a minute.
Yeah.
This doesn't feel quite right.
Right.
Like it's detached from,
Reality, yeah.
reality. Yeah.
Yeah.
You're not alone if you've ever felt that way. That's what we're diving into today.
Yeah.
Robert Shiller's Irrational Exuberance.
That's a good one.
It's a classic. It's really a deep dive into what causes these market swings, what causes those bubbles.
Yeah.
What does it mean for all of us?
I think what's so interesting about Shiller is he goes beyond just sort of like,
Yeah.
the numbers and the
Right. Hearts in the graphs.
He really digs into the psychology
Right. Okay.
of what's driving those big market moves.
So there's more to it than just economic indicators.
In May more.
Okay.
Yeah. I mean, like, he talks about these surveys he did with investors, and even after crashes like the one in 1987.
Right.
So many people were convinced that the market would bounce back quickly, even with the Dow at these like record high numbers.
Yeah.
And this belief was fueled by a lot of the, popular financial advice at the time.
So it was like everyone drank the Kool-Aid.
Totally. Yeah.
And they were just like super optimistic. But I mean, does history back that up? I mean, is that
That's the question.
really how it works?
That's what Shiller's trying to figure out.
Okay.
Right. He dives into those major market peaks and crashes, right? 1901, 1929, 1966. And each time you see this new era thinking,
Right.
this belief that like,
Right.
this time it's different.
This time it's different. So like the Roaring 20s, everyone's super excited about the radio and mass production, or the 50s, you've got television.
Yeah.
Post-war economy's booming.
Yeah, right. All this new stuff, it feels unique, right?
Yeah.
It feels groundbreaking. And so, of course, there's excitement around it.
Mm.
But Schiller is like, hold on a second. He's saying, look, these sentiments, they aren't always based in economic reality.
So how do we sort that out then? If it's not just the economy driving these bubbles, what else is going on?
Yeah. So Shiller points to a bunch of different factors, and a lot of them are actually psychological.
Okay.
Which is interesting. Like he talks about how the media, right?
Yeah.
The stories we hear, they influence
Oh, for sure.
how we view the market.
Yeah. I mean, think about it. Every day it's, the news is all
Headlines,
like,
market soars to new heights.
hot stocks. Yeah. The overnight millionaires, those are the stories that really grab our attention.
Right. And that's part of the problem, right? Because it creates this feedback loop.
Okay.
This like self-fulfilling prophecy.
Yeah.
So the more the market climbs, the more people hear about it.
Right.
The more they want in. And that drives the prices up even further.
It's like a snowball
Totally, yeah.
effect, but with money and emotions.
Exactly.
Which are a dangerous combination.
For sure.
Yeah. I mean, it's easy to get swept up in that.
Right. Absolutely.
Especially when you see your friends, your family, even strangers. It seems like everyone's making money in the market.
Yeah.
And you're just like, well, I don't want to be left out.
I don't want to miss out. Exactly. Yeah. It's that,
Right.
Shiller calls it herd behavior, right? This
herd behavior, right.
This desire to belong. And it can be so strong that it overrides any kind of rational decision making.
Logic goes out the window.
Out the window.
Fear of missing out takes over.
Totally.
And then you've got, on top of that, you've got overconfidence.
Oh, yeah.
Right. Everyone's making money, so you're like,
I could do that too.
Yeah, I can do this.
Right.
I'm smart.
Of course.
Yeah.
It's human nature, right? But Shiller's research actually found that after that 1987 crash, nearly half of investors that they surveyed still thought they knew when the market would rebound.
Wow.
Think about that. Like,
that's a lot of confidence.
That level of certainty in something as unpredictable as the market.
Right.
Like, that's overconfidence fueling these bubbles.
Okay, so we've got media hype, we've got this herd mentality, we've got overconfidence. It's starting to sound a little bit like
gambling.
Well, you're picking up on something there, because Shiller actually draws this really interesting parallel between the stock market and Ponzi schemes.
Whoa. Okay. Now hold on a second.
I know.
Those are illegal.
Right. He's not saying that the stock market is a Ponzi scheme.
Okay.
But he's highlighting this like similarity in the psychology.
Okay.
Right. So in a Ponzi scheme, the early investors, They get paid with money from new investors, right?
Right. And that creates this illusion of like, oh, this is sustainable. These profits are real. And what Shiller's saying is you see that same kind of thinking, that same kind of hopefulness, that same kind of,
belief.
Yeah, belief that like as long as new money's flowing in,
right,
everything's great, prices are rising, and we're all geniuses.
Right, right. But as with any bubble,
right,
what goes up
must come down.
And it's come down.
Exactly. And when that new money dries up,
right,
bubble bursts.
And then everyone's scrambling for the exits.
Yeah.
Speaking of, these sort of cautionary tales, Shiller talks about Polaroid, which is kind of a fascinating example.
Oh, yeah. Polaroid. I mean, they were like the hot tech stock.
Yeah, they were a big deal.
The 70s, everybody wanted in on that.
Instant camera, everybody wanted a piece of that.
Innovation, right.
So we get it. Polaroid, they were a big deal. But what's the takeaway for investors today?
Well, I think it's a cautionary tale, right? Because even companies with great products can become like dramatically overpriced. And that's driven by all that hype speculation. Shiller actually calls them story stocks.
Story stocks. Okay. So is he saying that we should be wary of all tech stocks?
I don't think he's saying don't invest in tech.
Okay.
But I think what he's saying is separate the hype from the fundamentals.
Okay.
Because it's so easy to get swept up in a good story, right?
Yeah.
Especially with new technologies. But a compelling narrative doesn't always mean it's a solid long-term investment.
Right. It's like those dot-com stocks in the late 90s.
How?
So much hype.
So much hype.
So little substance.
And we all know how that ended.
Yeah. So if we can't just rely on this kind of new era thinking.
Right.
Or the next, the
next big thing.
Big tech stock to make it big. What's a savvy investor to do?
Well, that's where Shiller gets really interesting because he starts to challenge some traditional investment wisdom.
Okay, like what?
Like the idea that stocks always outperform bonds in the long run.
Wait, really?
Yeah.
I thought that was like investing 101.
Right. You hear it all the time. But, Shiller argues that's not the whole picture.
Okay.
He points to periods like the 1970s, right, where inflation was actually eroding stock returns. So bonds actually did better.
Interesting.
So he's advocating for a much more nuanced approach to long-term financial planning.
So it's not just, put all your money in the market and walk away.
Exactly.
Okay. So if stocks aren't always the guaranteed winner, what does he say we should be looking at?
Well, he has a couple of different ideas. One is he thinks we need to really rethink retirement plans.
Okay.
Specifically 401k.
Okay, so these are the ones that...
Yeah, these are the ones.
You pick your own adventure, basically?
Exactly. Choose your own adventure retirement account.
Yeah.
And, while they were well-intentioned, Shiller worries that they might be pushing people to take on more risk than they realize.
Right.
Especially when you're talking about retirement savings being tied to the volatility of the market.
Yeah, you don't want to be, 65 years old, ready to retire, and suddenly the market takes a dive.
Exactly.
Yeah, that's not a good feeling.
Not the roller coaster you want to be on.
No, not at all. So, so retirement plans.
Yeah.
Maybe need a little bit of a rethink. What else? I mean, I assume he's not just...
No, he's got
he's got solutions. One of the more, I think, radical ideas is this idea of creating these new types of markets that are focused on long-term fundamentals instead of just short-term speculation.
Okay.
And he calls these macro markets.
Macro markets? Okay, I'm intrigued. Tell me more.
So, imagine this, right? Imagine being able to invest in the overall health
of the U.S. economy.
Okay. So instead of picking individual stocks, you'd be betting on bigger economic forces.
Exactly. In essence, yeah. So these macro markets, they would trade these futures contracts that would be tied to things like national income or even like global GDP. And Shiller argues this would give investors a way to hedge against these broader economic risks, right? Not just focusing on, will Apple go up or down today?
So it's almost like, in a way, taking out an insurance policy.
That's a great way to put it,
on the entire economy. So if things do go south, you've got this other investment that would theoretically...
It could cushion the blow.
Cushion the blow, yeah.
Exactly. It's about, spreading your risk more broadly and really aligning your investments with those long-term economic fundamentals.
Yeah, it's a very different way of thinking about investing.
It is.
Than I think a lot of us are used to.
Right.
But it makes a lot of sense when you think about how interconnected our lives are. Yeah.
With the economy as a whole.
Absolutely. And it really all comes back to that core message from Shiller, right?
Right.
Recognizing and managing risk, especially in a market that's often driven by emotions.
Right.
And can get really disconnected from those underlying fundamentals.
Yeah. So it's not about saying, don't invest in stocks or be completely pessimistic about the future, but just approach it with a healthy dose of caution.
A little bit of caution.
So we're not just like along for the ride on this crazy train.
Yeah.
You can actually maybe steer a little bit.
Yeah, absolutely.
Okay, I like that. I like that a lot.
Yeah, and Shiller gets into some specifics, which I appreciate,
Okay.
Like one idea that he throws out there that I thought was pretty intriguing was this concept of home equity insurance.
Okay, so
have you heard of this?
Like homeowners insurance?
Yeah, kind of. So think of it like, you have homeowners insurance. Right.
To protect you financially if your house burns down.
Right.
Home equity insurance would be if the value of your home plummeted.
Oh, okay. Interesting.
Yeah.
So if the housing market takes a dive, happened back in, what was it, 08, 09?
Exactly.
I'm not left, completely
high and dry.
High and dry. Okay.
Yeah.
That's interesting, especially with, so many people, their home is their biggest investment.
Absolutely.
Yeah.
Their biggest asset.
Yeah.
Yeah, and I think, it's interesting because it really speaks to this idea that, our financial lives they're not separate from the economy, right?
Right.
We're part of this.
It's all interconnected.
Interconnected system, and bad stuff happens, right? So how do we kind of create these systems that can sort of help us when those unexpected things pop up? And along those lines, another idea he proposes is income-linked loans.
Income-linked loans. Okay.
Yeah. So imagine, you take out a loan. Maybe it's a student loan.
Right.
Maybe it's a mortgage.
Okay.
But your monthly payments, they actually adjust based on your income.
Oh, okay.
So if you, God forbid, you lose your job.
Right.
You have a pay cut, whatever. You're not stuck with this
huge burden.
Unmanageable burden, yeah.
Okay, that makes a lot of sense. Especially, like you said, in uncertain times. It's like this built-in, I don't know, safety net, maybe?
Exactly, yeah. It's like a little bit of a buffer.
Yeah.
So you're not, completely
derailed
if something happens.
Right, okay.
And again, it's really about that, more holistic approach that Shiller's talking about, recognizing that life happens, right? Finances are messy, and how do we...
Right, it's not always up and to the right.
Exactly, it's not a straight line, right? It's going to be bumps in the road.
Not always glamorous, that's for sure.
No, not glamorous, but important to, to acknowledge.
To be realistic.
Exactly.
Okay, so we've talked about some more kind of, I don't know, maybe practical policy type solutions, but you mentioned earlier macro markets.
Oh, yeah.
And I have to admit, that one really
it's a little out there.
It's out there. It's kind of futuristic almost.
Yeah.
How would those even work?
So basically the idea is to really shift our focus from that short-term speculation to the long-term.
Okay.
What are the long-term economic trends?
Right.
And so imagine being able to invest in the overall health of the U.S. economy or even the global economy.
So instead of picking individual stocks, you're betting on...
Right, you're looking at the bigger picture.
Okay.
Right. So these macro markets, they would trade futures contracts. But these contracts would be tied to things like we said, national income, or global GDP. Okay. So it's really about looking at those big forces that are driving things.
So it's almost like, I'm trying to think of an analogy. It's almost like, I don't know, taking out an insurance policy on the entire economy.
Yeah, that's a great way to put it.
If things go south,
right,
I've got this other investment over here. That one
theoretically, help balance things out.
Yeah. Okay.
So it's spreading your risk more broadly, but it's also really consciously aligning your investments with those long-term,
with how the economy is actually
fundamentals of the economy. Yeah, exactly.
Okay, that's interesting. it's definitely...
It's different.
It's different. It's a different way of thinking about it, but...
It is, but I think it speaks to, Shiller's bigger point, which is,
The interconnectedness and really kind of like recognizing those risks.
Right.
And being, I don't know, I want to say like afraid, but just being aware.
Right, aware, yeah.
Of those forces that are at play.
Not just sticking your head in the sand.
Exactly.
Yeah. Okay.
Yeah, so it's not that stocks are bad.
Right.
It's not that, the future is all doom and gloom, but we need to be realistic and kind of approach it with a healthy dose of,
perspective.
Perspective, yeah, absolutely.
It's like hope for the best but prepare for the worst, right? He's kind of saying that applies to investing as much as anything else.
Absolutely, yeah. I mean, and I think it's really about just being a little more realistic, right? A little more informed, and just acknowledging that, markets go up, they go down.
Right.
There are these periods of irrational exuberance.
That can really throw things out of whack.
Right. Okay. So knowing that, I mean, are there other concrete things we can do? I mean, as investors or even just as people trying to navigate this crazy financial world that we live in.
Yeah, I think Shiller would say knowledge is power, right?
Okay.
Like educate yourself about financial history, right?
Yeah.
Understand how markets work. Understand, cycles. Be aware of the psychological factors that are at play because
it's not always rational.
No, not at all. Right. So don't just follow the crowd.
Right.
Don't just, take hot stock tips.
Right.
Do your research.
Right.
Understand your own risk tolerance.
Right.
And make informed decisions.
So be proactive, not reactive.
Exactly.
Yeah.
Exactly.
Okay.
And I think, going back to diversification.
Right.
We talked about that, but I think it's important to reiterate that, Shiller's view of it is broader.
Right. It's not just like
your stocks and bonds.
Exactly.
Yeah.
It's looking at your whole life, right? Like, what do you do for a living? What is your, what are your expenses? All of that factors in.
Yeah. Look at the whole picture.
Look at the whole picture and think about,
right.
Okay, what are the potential risks out there?
Yeah.
And are there investments that I can make that would kind of act as a counterbalance?
Right. So you're hedging your bets.
You're hedging your bets. Exactly.
In a more holistic way.
Exactly. Yeah. You're creating a more resilient portfolio, I guess you could say, for your life.
Yeah. That can weather the storms. Right.
Exactly.
Because there are going to be storms.
There are always going to be storms. Yeah. And you can't control everything. Right. But you can control.
You can control how prepared you are.
How you react.
Yeah. And how what systems you have in place.
So it's about taking control of your financial destiny, I guess.
Yeah, I like that. That's a good way to put it.
Not just being like along for the ride.
Not just being passive, right? You have agency in this.
Oh, okay. I like that.
Yeah.
It's a powerful message.
Yeah. And I think
especially, these days when everything feels so uncertain.
Right. And it's easy to get caught up in,
right, all the headlines.
The headlines, the fear,
the ups and downs, yeah.
Yeah, but I think what Shiller reminds us is we can't predict the future.
Right.
But we can be prepared.
We can be prepared
for it.
Right. Okay.
And that starts with understanding ourselves.
Right.
And the forces that are shaping the world around us.
Right. Well said. Well said. So I think as we wrap up this deep dive into irrational exuberance, a final thought for our listeners to kind of chew on, the next time that you find yourself maybe caught up in the excitement, right? Of a bull market, or maybe you're worried about the next recession, whatever it might be. Remember Shiller's message.
Yeah, take a breath.
Take a breath. Right.
Take a breath. Tune out the noise. Focus on those fundamentals.
Right.
Understand your risk.
Your risk ton.
Diversify.
Be prepared.
Make informed decisions.
Right.
That align with your long-term goals.
It's a marathon, not a sprint.
Exactly. It's not about timing the market. It's about timing your life.
Well said.
Thanks.
That's a good one to end on, I think.
I think so, too.
All right. Well, thanks for diving in with us on this one.
Yeah, thanks for having me. I enjoyed it.
And to our listeners, as always, thanks for listening.